Welcome to Illuminati Silver. We tell the truth about silver. Today is Monday the 14th of December 2020 and we're comparing Goldman Sachs price forecast for gold with Capital Economics price forecast for gold in 2021. So let's take a look. Firstly, just a quick shout out to the videos we produced over the weekend. On Saturday, our Gold and Silver Weekly Update for the weekend in the 11th of December. And yesterday, Bitcoin versus Gold and Silver, Episode 2 in our new series. And we've placed links to both of these in the description box below. Now today, we're continuing with our Gold and Silver Price Forecast series, where we look at what other financial institutions are predicting for gold and silver prices come 2021, before we publish our own just after Christmas, and compare that with how accurate our forecasts were for 2020 and how our forecasts for 21 will compare with other influencers in the marketplace. Now, on the 9th of December, we published a video entitled Gold Forecast to Rise to $2,300 in 2021, where we quoted an article by Capital.com, and we also published, just shortly before that, $1,000 Gold Next, Not $5,000 by Harry Dent. And again, we've placed links to these below. Now, today we're looking at two quite substantial and influential institutions, Goldman Sachs and Capital Economics, which hold differing views as to where they see the gold price resting next year. So let's take a look at what both of these have to say and predict. Forbes article dated November 17th, 2020. Headline: Goldman Sachs, Gold Bull Market to Resume in 2021. Recent lackluster price action in the precious metals market shouldn't leave gold investors down in the dumps. Shortly, the bull market for the yellow metal is set to resume, according to a recent report from Wall Street bank Goldman Sachs. The report states the situation as follows, quote, "In our view, the structural bull market for gold is not over and will resume next year as inflation expectations move higher." How high? Goldman has a price target of $2,300 a troy ounce. That compares with a recent price of $1,888, according to data from Bloomberg. If that forecast proves correct, it should bring some cheer to the gold bugs, as the price has been in a downward trend since early August. The price of bullion reached an all-time high, around $2,064 on August the 6th, but has slipped back since then, as news of the economic recovery has improved. The SPDR Gold Shares GLD exchange-traded fund, which holds bars of solid bullion, performed similarly over the period. Rising inflation expectations should boost gold, but Goldman sees the market for bullion perking up soon as investors start worrying about inflation next year, and the real or inflation-adjusted cost of borrowing money falls further. The report explains as follows, quote, "The $2,300 price target incorporates our unchanged assumption that 5-year US real rates move to -2% from -1.2%. In other words, if inflation rises but interest rates stay low, the real cost of borrowing will fall further into negative territory, so making gold more attractive to investors. Gold yields no interest or dividends, but if bonds pay interest that doesn't even keep up with inflation, bullion looks increasingly attractive. Gold has a history of maintaining its purchasing power over long periods. The Goldman report also says an expected strong recovery in gold demand from emerging markets should boost demand for the metal. Meanwhile, in developed countries such as the US and much of Western Europe, investor demand will get rekindled as investors see spending power of dollars and other paper money get debased. The strategic case for gold remains strong in our view, the report states. End of article. Capital Economics article dated 10th of December. Precious metals update. The risks to our gold price forecast are to the downside. We expect that the price of gold will trade at around $1,900 per ounce through 2021, as US real yields remain low. That said, we recognise that there are some key downside risks to our forecast. US nominal yields could surge and investors could intensify their selling of safe haven assets, perhaps because of a faster than expected revival in US economic activity. The gold price rallied for most of this year owing in large part to the fall in both nominal and real yields, as well as an increase in safe haven investment demand in the wake of the virus-induced economic slump. However, the gold price has dipped from its August peak as investors rotated out of safe havens into riskier assets on hopes of a vaccine-induced economic boom next year. Our current gold price forecast is based on our view that US real yields will slip a touch in the year ahead. The adoption of average inflation, targeting by the Fed, should keep nominal yields grounded, while higher oil prices should lift inflation expectations. Although this could boost the price of gold above $1,900, as it did earlier this year, we think that the main risks to our 2021 gold price forecast lie to the downside for two key reasons. First, US real yields could rise if nominal yields pick up by more than we anticipate, perhaps as a result of a faster than expected rebound in US economic activity. The market currently expects US interest rates to remain near zero at least until 2023, but this could be brought forward if inflation persistently overshoots its 2% target and if the unemployment rate falls quickly. Nevertheless, we suspect that any decline in the gold price would be limited, as the Fed would almost certainly step in to prevent nominal yields from increasing too much. Indeed, the new average inflation target is an attempt to avoid a repeat of the 2013 taper tantrum episode, when nominal yields surged on the back of market-based fears surrounding tighter US monetary policy. Second, investors could intensify their selling of safe haven assets such as gold-backed ETFs. Demand for ETFs soared earlier this year on the back of virus-related economic uncertainty. However, it has eased back in recent months in tandem with a pickup in investor risk appetite. That said, we think that investment demand will remain high by past standards for some time yet. After all, yields are still ultra-low, and there is also lingering uncertainty surrounding both the global economic recovery and distribution of coronavirus vaccines. As it stands, we think that persistently low real yields will support the price of gold in 2021. Nonetheless, the price could fall if the US economy bounces back much faster than the market currently expects. Well, Goldman Sachs clearly sees inflation next year as a serious prospect. Capital economics are not so certain, and even argue that if inflation does rise, there is still a possibility that investors will be looking for income from their investments, which gold and silver does not yield. That said, there is substantial evidence to show that gold in particular, and silver often with it, does tend to rise in an inflationary environment as opposed to a deflationary one. And we shall have to see whether Goldman Sachs' anticipated inflation does actually occur. Harry Dent, of course, thinks the opposite is the case, and that the Western world, if not the whole world, will be suffering serious deflation. Interesting. But what do you think? Please do share your thoughts. Meanwhile, thank you so much for listening, and if you haven't already done so, kindly subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they are published. And we shall be producing another one of these gold and silver price forecasts in the next couple of days, and right up to the Christmas period. Also on our Richard and Greg channel, we shall be providing a Brexit update. I'm hoping to get hold of Greg later today, in which to do that, and failing that, that will come out tomorrow. Thank you once again. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.